Good morning from Los Angeles. Welcome to Trading with Sergio. How was everybody's weekend? Mine was pretty uneventful. Back to trading this morning. As usual, I will share my position screen with full transparency. And in fact, I'll have to not cut it too short, but I have to watch my time today for the fact that I am going to be going down to, if you know LA area, I'm going to Orange County, to Laguna Niguel, to be exact, which is about a 75-mile drive, for an overnight trip for the Roth MKM conference. They are Roth Capital. I have close relationships with a bunch of analysts, but they asked me to be on a panel regarding Uber and Lyft and autonomous vehicles. And I was happy to oblige. So it should be a nice overnight quick trip and meet some wonderful folks. And they have a concert tonight by the Goo Goo Dolls. Now, I don't know how many people will remember that. But they put a full-on event. There are about 700-800 people participating. So it's a pretty big conference. And it's good to go meet some people. In fact, I'm going to be on the same panel as a gentleman who is the founder of Marte, which is the Uber of Turkey. And as some of you may know, I was born in Istanbul, Turkey. So I don't think he knows I speak Turkish, but should be an interesting night. And tomorrow morning, I'll do my panel, get in the car, come back and do Show Me the Money on the other channel. So it's going to be a busy couple days, but I haven't forgotten about trading. I'm basically in a wait and see mode. As today's headline clearly indicates, that cap bounce that we got on Friday is being tested. We're red in NASDAQ and green on S&P 500, but there is some rotation going on underneath, which I'll talk about. More importantly, I have cash secure puts, and one of them got into trouble this morning. We'll see what I'll do with that. But the other three are doing fine. I'm out of the money on the other three. Either they're going to expire worthless, I'm going to get assigned. I was willing to get assigned, except one of them I may not want to do so and take a small loss and move on. I'm doing one thing for sure. I'm managing equity a lot tighter over the last 3 weeks since we started this massive sell-off. The other thing I'm doing is sizing correctly, right? You got to keep size small. You can't, according to your account size, obviously, but dealing with a six-figure account and keeping size large when the market's dropping 14% in NASDAQ and underlying some of the stocks are dropping 30-40%, you will get blown out. Well, more than blown out, your drawdown will be a lot more unless you're strictly into indexes. So what else is going on? Oh, there is obviously economic data. Big week. I will be back for that one on Wednesday. So let me go through the schedule real quick. The schedule is Mondays, Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Fridays, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. And then on Wednesdays, I think this Wednesday, I may do it at 5 p.m. so more people can participate. A members only live. Whoever are members know what I'm talking about. If you're not a member and you want to support the channel, just click on join the membership. You'll have a bunch of perks. The most important perk, I think, is free Telegram chat group. There are about 25 of us in there. I'm in there, some experienced traders in there, some newbies are in there. It's a good group. They're learning. In fact, they're learning the hard way. I mean, we created the chat group, and within a month or two, we had the sell-off. So then I don't think many of them had experienced a sell-off like this, except a few of us. So we're trying to guide them and keep them out of trouble. So if you do choose to become a member, I appreciate it. I appreciate the support. You get that. You get 4 members-only live streams every Wednesday of the month, of the week. And you get a free t-shirt like this. So all you have to do is email me which is a $30 item, by the way. So you email me, Sergio@sergioavedian.com, and we will send you out a free t-shirt, including shipping. So you're getting a lot for your money when you become a member. So what's happening this week? We have massive, obviously, Fed interest rate decision, and Jay Powell's statement and news conference, or whatever you want to call it, is going to be on Wednesday. That's at 11 a.m. So it's going to be volatile. The more important thing is quarterly OPEX option expiration is on Friday. Billions and trillions in options are going to expire. So expect volatility to continue. And then, so today, retail sales data came out. Horrible numbers, really. 0.6% expectation increase, 0.2%. So it does seem like the consumer is getting or pulling back a little bit. Consumers, as stretched as they are, with credit card debt at all-time highs. So I have some videos coming out this week regarding what the Trump administration is trying to do, how they're trying to slow down inflation. It's a risky proposition, but we'll see if they succeed or not. So tomorrow we have February housing starts data. Housing starts really are struggling just for the fact that the unaffordability or affordability index is an all-time low due to interest rates, obviously, mostly. And Wednesday, Fed interest rate decision. I don't think they're going to cut this time around. If they do cut, it'll be a huge, actually, it may be negative that I'm thinking. They may be admitting that the economy is slowing down extremely quickly, or we may even go into a recession. On Thursday, we got initial jobless claims data. Last week's jobless claims were nothing special to talk about. On Thursday, we also have Philly Fed manufacturing data. And on Thursday, again, we have existing home sales data. Home sales are declining, existing and new home starts, for the fact that interest rates have not come down. So the Trump administration is trying to bring interest rates down by, they're telling Jay Powell and the Federal Reserve, cut the rates. Well, they don't want to cut the rates because they see inflation is not going anywhere. So the Trump administration has been, I mean, it's been clear to me over the last month or so, from Scott Bessent, who's the Treasury Secretary, to Trump's comments, are that they are intentionally trying to slow the consumer spending down. Well, if you do slow consumer spending down, 80% of our GDP is consumer spending. So if you intentionally try to do that and lower inflation that way, and then end QT, which has been going on, not really actually, because M2 money supply has actually started to grow again about a month ago. So the printers have been turned on. They're not on full force, but they've been turned on. But the bond market is not listening to the Fed. The Fed is trying to lower interest rates by cutting the Fed funds rate. In fact, TLT is my key indicator, obviously. TLT is not going up. When TLT goes up, it's an inverse indicator. When TLT goes up, that means interest rates are coming down. Well, it's not happening. In fact, the quite opposite has happened. So the Fed has cut the interest rates by 100 basis points, and the market has raised the interest rates by 100 basis points. That's why home affordability is an all-time low, and that's why new or existing home sales are on the tank. People cannot afford it because mortgage rates have not come down from a sticky 6.5%, 7% level, which they used to be 3.5%. So, what are the chances of a couple in their 30s, decent jobs, being able to buy a house, specifically in certain places like California, let's say, right? Really, really impossible almost, because every little shack is $1 million. So, home sales are declining. Prices are still holding in there for the fact that inflation is kind of sticky. It's holding. Another thing to pay attention to, which I have a video coming out this week, is about gold. Gold just hit $3,000 an ounce. There are many reasons for that. Some of the reasons are a lot of nations, BRICS nations especially, are absolutely just buying gold like there's no tomorrow by the tons. Because what protects you during an inflationary period? Gold, hard assets, real estate, right? Stocks, although they do sell off because it's more economically sensitive, because macro picture seems like it's changing from soft landing to a slowdown now. Slowdown is difficult to handle, but the Fed is doing the right thing, cutting interest rates. And but the market's not listening, because the other thing we have, another video have coming out this week, is who needs lower interest rates the most? U.S. government does. USA does. Why? We have $9 trillion of bonds and notes maturing, right, in the first quarter. I mean, the first and second quarter. So $9 trillion, that's part of our debt, right? That we had issued debt 10 years ago, 15, 20 years ago. They're all maturing. Well, at that time, we had ZIRP, zero interest rate policy. So the bonds that they put out then were about 3.5%, 4% max. While the new ones they're going to issue, they have to pay more interest on it, the IOUs that they're going to issue. And those are going to be the ones that replace. They're not going to get paid back. The only way to pay them back is issue new ones to replace the old ones. So what's going to happen? Well, what's going to happen is the new bonds are going to be priced at a level, as far as their interest rates are concerned, at a much higher level, and that's going to add actually to our interest rate costs on the $37 trillion national debt now. Although Doge is trying to do some things, but I think it's peanuts what they're finding and cutting. We'll see if that's going to be successful. I have another video coming out about that too, if it's going to be enough of what they're doing. Because we're talking about $37 trillion in debt, and just the debt servicing of that is $1.2 trillion now. I mean, what's happening here, right? Well, first we have to slow down the debt from going up. Then we can worry about lowering it. But at least once we slow down, this refinancing that's coming up of $9 trillion of bonds, the rates are higher than what they were before. So we have to pay more interest for the next 10, 20 years. Look at that money wasted. $1.2 trillion, by the way, in interest only, right? That we're going to pay around the globe, or the bond and note holders, is almost twice as large as our military spending, 1.5 times our Social Security. Imagine if we didn't pay that, how much good could be done with that $1.2, $1.3 trillion, right? Unfortunately, we are in this pickle, and the new administration is hell-bent on balancing the budget. It's going to be difficult. It really is. The only way to do that is lower GDP and put the economy in a recession. Well, we put the economy in a recession, then we lower interest rates. Then by the end of this term, hopefully everything will be rosy. Because initially, if you guys can recall, in Trump 1.0, he cared about the stock market quite a bit. Now, every question they ask him about, market's down 10%, he goes, it's not my problem, it's Biden's problem. I don't know about that. Because market's sniffing that what they're trying to do is quite risky, and adjusting. Because market is the best pricing mechanism on the planet, right? So what you see in front of you is what you get. You may agree, you may disagree. Your edge is going to be to find what is mispriced. And market does misprice. I'm not saying it doesn't, but the mispricing and finding that takes a lot of tools, takes a lot of experience. And well, that's why I'm here. I'm trying to educate and inform. It's not financial or trading advice, but I've seen all these movies before, and I can draw from my past experiences and act accordingly. So I'll do my quarterly account situation, or account balance, trading account balance. I have two accounts, as most of you know, investment and trading. I have one position in my investment account, and I'm trying to buy another position fully by having cash secured puts on a stock that I was in before, which is Kava. So we'll see. We'll see where we are on that. I hope I get assigned. On my trading account, I had a wonderful January, gave some of it back in February, and gave a little bit more of it back in March, but March has not ended yet. We have another 10 days to go. I just want to finish this first quarter green. If you finish this first quarter green, there's going to be many, 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 many opportunities, because we're early on the year, okay? And once we get out of this mess, which I think it's not going to be short-lived, I think if the Trump administration intentionally is putting the economy in a slowdown or a recession, it takes a while. So, but market 6 to 8 months ahead, and it's pricing that now. So if we do end up pricing a recession in, depending on economic data that's going to come out, the best day actually to buy stocks is the first day they officially announce a recession. What is the official measuring or more official announcement of a recession is 2 negative GDP quarters in a row. And Atlanta Fed's GDP is negative already, but it hasn't come out yet. But so officially, if we have 2 negative GDP quarters in a row, we're officially in a recession. Well, once that's announced, that's the best day to buy stocks because we know what's going to happen. Market 6 months ahead, it would have priced it in already. I'm guessing S&P 500 will be about 25-30% from its high, which will put us right about 5,000, 4,800. And it's justified. So, but then that's going to be, I think, a wonderful, wonderful buying opportunity. So, with that said, keep your powder dry. Always have some cash on the side. I'm like 85% cash in my account. And when you do have the opportunity, right? Because if you do squander your cash trying to trade here and there while the market's really volatile and tough, you're going to miss all this opportunity coming up. Markets open every day. You just need to, show up some patience and size correctly. Even if you do want to trade small, survive this time, and then put the gas on. I mean, I've seen this many times in 30 years. So, all right. So let's see. Hey, Marcio, what's up? Well, I'm going to put the link up after I go through my account and few charts. As I said, I'm leaving for Laguna Niguel today, probably around noon. Not going to be watching the market close, but tomorrow all day I'm gone. So hopefully positions stay together. Let's answer some questions. I'll put the link up. Here's the link. If you guys want to show up and talk. Where is it? Right here. All right, so this is the link. If you guys do want to show up, you grab the link. Hopefully you have a good internet connection. If you don't, I'll boot you. But if you do, we can chat about it a little bit of what you guys are seeing. Let's answer some questions. Hey, I'm Google Dolls. Yeah, we're going to have a good time. Mr. Premium of Options. Tesla covered calls printing today. I know. The only way they're printing is because stock is down. I think you did mention that your cost basis is way below where Tesla is at. Honestly, I like Elon a lot. I like the car a lot. I just don't like the stock at this price. I think it has a lot more risk in it. I was in it with TSLL. I just lucked out. That's all I'm going to say. I was short 14 puts. I covered those with a little profit. Then I went 11 puts on the bounce. I covered those, either break even, a little loss or a little profit. I'm not even sure. But look where I would be. So I'd be really careful with Tesla here. I think it has some more pain to go. Could I see Tesla at 200 easily? I think 150 to 180, I think, is going to be the bottom on Tesla at some point. Just too much negative sentiment going on. I mean, when the market goes up, stock doesn't go up as much. And when the market goes down, it gets hammered. Look what's happening today, right? That goes to show underperformance as opposed to outperformance. That's the question, $1 million question. How will Russell do in this environment? It hasn't done well. Small caps have not done well, period, over the last 2-3 years. I mean, they have gone up, but nothing like the S&P 500 or the triple Qs, right? But if the rates start going lower, I think small caps, or specifically Russell 2000, is going to outperform the S&P 500. But what's outperforming now is the Chinese stocks, right? Well, I've been talking about this for 2 months now. Look at all of them. Look at Baba. Look at Billy. Look at Baidu today, flying. And if you had owned those stocks, you wouldn't have suffered any drawdown in your account, last 2-3 weeks. So, so Russell 2000, I think, will be a good play once the economy slows down, once the interest rates are probably in 3 to 6 months. I think Russell 2000 is going to be a good play compared to the S&P 500 and triple Qs. Lower interest rates are good for smaller companies, and I think that would be a good play. Okay, so I see one of my members out here. Let's add him, chit chat. Hello. Joe.
Hello.
How are you, sir?
Nice to see you.
I know you've been absent from our chat group. What happened to you?
Yeah, this week was tough. Not only I wasn't trading much, I was letting my positions play out, and I have been with a new company, and I did some driving this weekend, which was pretty fun.
Yeah.
I was super busy, but I got out of a little bit of a pickle on Friday. I had
Mm-hmm.
a 10 contract position on Amazon,
Mm-hmm.
and I was in the money for most of the contract expiration, right? The entire ride. And then on
Yeah.
Friday, the market pushed on Thursday, and then it kind of stabilized on Friday. And I was out the last hour and a half of the market.
Yeah.
I was about to roll the position, but I was able to collect 30% of the money and just call it a day.
Yeah.
But this market, I don't trust it. I really don't trust it. I'm looking at the structure of the charts. I thought Friday was a push from people closing out their weekly positions, and it squeezed a few people in because there were people that entered a late short during the week and they just closed it out so they don't have the short. But this is a net negative gamma market and still is. And until I don't see like the 3 SMA cross the 8 SMA, there's no long to be had yet. So
Yeah.
if I see that cross and on a daily chart, I see the cross happen, I'll go along. But right now, there's really nothing to do but sit on your hands and watch a little bit.
Yep. I agree with you. And as you know, we have big OPEX coming up on Friday, right?
Yep.
Quarterly expiration. It's going to add to the volatility, but you're right. Gamma is negative, delta is negative, both are negative. And the skew, I mean, the pushes to the downside, the sell-offs are a lot quicker than rallies. That's happening. But more importantly, I think it's just a continuation pattern that we're going to build here and then take the next leg down. Yeah, we may bounce a little bit more here. I mean, I see maximum, I don't know, triple Q's bouncing to 495, 500, and then S&P a little, maybe another 4%, 3%. But Friday's rally was super anemic, low volume, really. All the shorts just trying to cover to pretty much. And this is what happens in, bear markets. I mean, I think it's going to be a multi-leg down. And macro has a lot to do with it. And we'll see I think what Powell says more than what they do on Wednesday is going to have a lot of bearing on what happens going forward. If they turn a little dovish, it may change things. So more than what they announced, which is pretty much zero chance of cutting interest rates on this time around, although May is really going through the roof now compared to before as far as an interest rate cut. So just watch that and watch what they say. And I agree with you. Just sit on your hands, man. I'm putting actually like a video today or tomorrow out, but the headline is cash is a position.
It's really funny. Somebody asked about IWM, and IWM is really connected, even more than the SPY, very connected to the interest market because these companies are more likely to be living off of multiple loans to run their business, and the loan to revenue ratio, the loan to market capitalization ratio is much higher for these companies. So interest rate goes up, they get crushed. And they were pricing in 3 interest rate cuts this year. I think it's going to be 2. I don't think they're touching anything. The only thing that would maybe change my mind is if we really go down hard and then the Fed has to do something. And what the bond market is telling us is that if things continue this way, the economy continues to show some life, that there might be an even like 1 cut instead of 2, which is pretty crazy to think. Some people started talking about 5 cuts, and I'm like, I don't know what you're talking about.
Well, it was pricing. The Fed Fund futures were pricing in 4 cuts, 5 cuts,
4 cuts.
And then
Yep.
as soon as the first couple happened, they just lowered it. So.
Yeah. So I just.
So what do you think about my thesis that I've been developing? Okay, you're getting cut off. What do you think about my thesis that I've been kind of developing over the last month, that they're going to intentionally slow down the economy because
I agree
is
with
not
you.
listening to Trump? And you agree? Yeah.
I agree. Bassett is saying it. Bassin says at every interview that equities have enjoyed a run and that now it's time to take care of Main Street, right? He said it in one of his interviews. Wall Street is doing fine. Now we have to take care of Main Street. So if they do it, Sergio, if they do it, it has to be this year. It cannot be next year.
Oh, no, absolutely.
So
by the end of the 4 years, by the end of 4 years, we have to be booming. You know what I mean? So
correct.
So, but the other thing that's happening that I see is that, I really want to be like super, super long TLT, like really, really long, like literally like 50% of my account go long in TLT. It's just not going up. And when the market sold off, you would think it would be the counter trade to that, and it didn't even go up. And I'm going like, there's something wrong with this picture. But I think the 9 trillion, seriously, we'll have $9 trillion coming up to refinance, and I think that has a lot bearing on it, because most of them are going to be 10, 20-year notes, and buyers are not going to buy these pieces of paper if there is 3 on it, you know what I mean, on an interest, as far as interest is concerned. So TLT is saying inflation is not going anywhere. TLT is saying the new buyers are going to require a lot higher coupons on these bonds, and that's where we are. And so I'm watching TLT. I mean, today it's up a little bit, but I think if they really intentionally slow down the economy, I think TLT could go to 100, 105, 110, and we're at 90. And I think there is a big trade there, but I'm just kind of really just puzzled that why it's not going up. Usually, as you know, when the market sells off, TLT goes up, right? It's a flight to quality kind of a thing happening, but it's not happening. I don't know.
Yeah, I think on the bond market, I trust the bond market more than I trust the stock market. Much bigger market, right? Yeah. Bonds are enormous. So what the bond market is telling us is there's a fake out somewhere, right? Do we see the government bringing interest down because the coupon payment is going to be too high, right? When they go through bond refinancing, I don't know what the expiration schedule looks like. I have to take a look at it. But if you have a
9 trillion staggered, but it's 9 trillion in the next couple of months.
They stagger out, right? As the bonds expire, they have to refinance it. So if you have $9 trillion, your coupon payment is going to be pretty ridiculous, right? To service the debt, the government is going to be printing more money, which is not good news for inflation. That's one of the things that a lot of people don't understand about interest rates, is that once you start refinancing, when you start paying the debt, you're printing more money to pay the debt, and it becomes a cycle. You just more money, more inflation, more money, more. So they have a pretty tight window to correct this and bring the interest rates down. And I think Jay Powell has done a good job managing the situation. But right now, if they tank the market, it will help him have an excuse to start cutting rates, and the Fed will help itself. But he's not doing anything until he doesn't see the market take a dump or recession or unemployment. He has the mandate. So he's very attuned to that mandate. He's been really good about that.
No, I think that I agree with you. I think Fed has been doing a decent job holding on to their guns and saying that, look, man, we don't care what you guys are doing in Washington. We just watch the economic data and then act accordingly. We'll see. That's why I'm kind of interested in what they say, what kind of statement change they make from the last time to this time on Wednesday. And I usually don't pay too much attention to those, but I think it's going to be a massive catalyst if they do change the statement, if they go a little bit more dovish, if they say we see some weakness, that's a key. And then you'll see the futures on the Fed funds rate, start pricing in 3 cuts, 4 cuts, maybe again. The TLT is not buying it. TLT is just stuck at 90, and it had a little bit of a bounce from 85 range. So interest rates have come down just a little bit. But once the refinancing is done, and we'll see how much the economy slows down, because everything that coming out, economic data, is weaker than expected now. And the thing that I'm seeing that's different before we're on the way up for 2 years. We had weak economic data, but market would sell off for like a half an hour, and then it'll come back. So basically then bad news was good news for 2 years.
Yep.
Now bad news is bad news.
It's bad news.
Yeah. So once you see that change, you just kind of become really careful of what you're doing, right? Because bad news is bad news, can last for a while. But I'm pretty sure, I think we have at least another quarter and a half of maybe a couple of quarters of pain on the stock side. But we'll see. And but yeah, the TLT is just going to be my, outside the Chinese play, TLT is going to be probably my big trade of the year, because I'm just waiting. And if I'm convinced that rates are going down, I think that's where you can make a lot of money, because the premiums, as you know, what has happened to the premiums, implied volatility, and all options, index options are weeklies are at 30 over plus 30%. I mean, usually they're like 12, 14. Okay. Well, the other thing that I see happening, Marcio, is that I think we need to get used to a higher VIX level. We're very used to VIX being 12, 14 and IV being very low. I think we're in the next leg now, which is, I think VIX is going to stay between 16 and 20 on the low end, and then get up to 30 on some end. So that's why everything is getting priced in. So, high on the option side, and a lot of people, that's why it becomes really difficult to make directional bets now, because what you're paying is like so high compared to what historical value. Get stuck with something like that. My money says sell options because the IV is so high, but then if it's going to stay there, then what's the point? IV crush is going to come like probably the last 2 days of expiration, as opposed to 2 weeks before. If you sell something,
think about my trade on Amazon.
Yeah,
I didn't collect anything on these options. I collected about $32 per contract. That's $320 on the trade, and I'm down $4,000 because the volatility expanded.
Yeah.
So right now, because the IV is higher, you need to look at the IV ranking and decide if the instrument. First of all, you need to want to own the stuff.
Yeah,
I was okay. Sure. I'm okay right now. I have a trade on Walmart. It's down. Walmart, my strike is 90. Walmart is at 87. I'm completely okay owning Walmart at $90.
Yeah,
perfectly fine. Yeah. I have a trade on Nike where my contract strike is $70. It's now.
I think you're okay there.
I'll take the contracts. I have 10 contracts on that. I'll take the shares, no problem. I love Nike, right? Long term. Yeah. So if you're selling cash secure puts, you really need to be thinking, do I want to own it or not? Right? Because otherwise you take a loss and the market's volatile, you get a little scared, you paper hand it, and then you lose the trade.
Yeah.
So that's number one. I think the second thing that we see on TLT specifically, because I like the TLT trade, $85, between 85 and 87 is a crazy good entry. So I'm taking a look at maybe selling the 87 contracts and going synthetic long, but leaps.
Yeah.
For next year. This is not a trade that's going to, it's a slow burn type of trade. It's not going to pop next week.
Yeah.
But I do see us in the $95 to $100 range on TLT for next year when they start cutting. And
you're at the money leaps?
Yep. I'm trying to do, actually, I'm going to try to buy in the money leaps. I'm going to try to buy them like around like maybe 70 delta is what I'm going to try to do. Okay. So I'll do the in the money leaps and just sit on my hands. No cash secured, no cover calls, nothing. Just hold.
Oh, just leaps, not finance the purchase of the leaps.
Finance, no, I'll sell lower, right? So what I'm going to try to do is I'm going to try to sell the 87s, see how much I can buy with the in the money is probably going to be like 88 right now because it's $95, right? It's $90, so it's going to be probably 88, 87. Yeah. So I'm probably going to sell very close to where I want to buy. I'm not going to be able to buy much, but I'll put money. I'll outlay money because I know this is a kind of a guaranteed trade, right? So you just have to be patient. The thing that's happening now that I am thinking about is, for example, with Tesla. I was looking at the chart, obviously really ugly chart, but I think what's really crazy about Tesla is this: you have people on Friday, right? You see a bounce, it consolidates exactly at the average and just gets absolutely crushed today.
Yep.
And I don't see, it just doesn't look like it's going to turn around anytime soon. I still see a leg down for Tesla. That level, like around 220, 217, which is where it bounced, seems to be like a decent resistance there because of the volume that came in to support the stock. But a lot of the Mag 7 stocks, salvo NVIDIA, that had a really decent pop, those are not great charts, right? Nothing is like really great
None
charts.
Of them are. Yeah,
for you to go long, for you to go long now. So you have to be careful what you're entering in.
Yeah.
Just be careful because they may have some short-term pain, right? They have to feel on those larger stocks.
Yeah, I agree. I think Tesla, everybody loves the company. Everybody loves the car. Everybody loves Elon. Well, not everybody these days. Everybody who loved him hate him now. So, all the tree huggers were like, "Oh yeah, he's going to save the world. The EVs are the best thing." And then now they're like, we're crushing the dealerships. I'm going like, what happened to you people? How fast they turn, right? So, but my point on Tesla is, I actually had a debate or a little bit of an argument with a friend who's actually a member, Kyle, on the channel.
Yeah, of course.
I said it's a car company, and then he goes, Tesla's not a car company. I'm like, it's a car company. I mean, you can until everything else, because everything else that is going to come in the future can't be priced in because it's so far into the future, from the robotaxi to the Optimus robot to all these other things, right? Because SpaceX is not in Tesla, this company itself, right? Those are all separate companies. Everything else he's doing is doing fine, but Tesla as a car company at the moment is priced incorrectly as far as I'm concerned. As far as I'm concerned, Tesla probably, I really could see Tesla lower. But look, man, let the market tell you. When the market was up a lot on Friday, let it be short covering, let it be fresh buying, whatever it is, right? The other thing that I'm seeing in the market, by the way, before I forget, is the seasonality of the situation, right? The first 6 weeks actually is pretty strong because all the 401k money is coming in, all the retirement money is coming in. The saving grace of the market is, I was reading something over the weekend, between CDs and money market funds, there's $11 trillion sitting in these short-term, tools, right? So that may be a little bit of a put, I don't know, we'll see. But going back to Tesla, technically it's a horrible chart. Fundamentally, it's a horrible situation at the moment. I think the first big bounce in Tesla probably is going to happen. You know how to sell on news, buy on fact. I think it's going to be when they announce the car sales, because everybody's lowering the car sale estimates for the quarter, right? We're going from 450,000 down to 330,000. Even if it's a bad number, that may be the relief rally, a decent relief rally, maybe 50, 60 point relief rally on Tesla. But market goes up, Tesla goes up a little bit on Friday. Today, market's not even down that much, and Tesla's getting hammered. So it's completely underperforming. Why deal with something that's underperforming? Yes, you like it. Yes, a lot of people go, oh, I'm super long-term. I'm like, okay, cool. But, expect a little bit more pain in Tesla. I don't think it's that simple.
Yeah. Well, so there's a couple of things that fundamentals on Tesla are horrific, right? For a car company to have PE of 115 and for the forward PE to be 62, that's pretty crazy. If you look at Toyota and any other company.
Those estimates are going to get slashed now, right? I mean, and it happened to be, by the way, at the worst possible time from it was their best-selling car, the Model Y, right?
Model Y.
They're transitioning to the new Model Y now, and there's not enough cars to be sold, so car sale numbers are going to be horrible. But then that's why I'm thinking when the car sale numbers come out, Model Y goes into full production, that's when I think we can tell if people are still buying Model Ys or not.
Yep. That's another tell that I don't love seeing today. I was looking forward to seeing if we were going to get continuation on NVIDIA, and we're not. We're down 2%.
Yeah, we're not getting that. We were up in the morning. We turned around. Apple, same thing. Palantir, same thing. A lot of these Max 7s, they're all under their 200 MAs.
Yep.
There is a reason that they're all under their 200 MAs. I mean, look, technicals are technicals. It tells you what happened in the past. But look, being under 200 MA, that is my number one rule. Don't touch anything that's under 200 MA. Wait until things settle down. There is like 10,000 other stocks. That's why now I actually did build it a couple of weekends ago. New 52-week high list, right? Just buy the new 52-week high list if you have to be involved, right?
Yep.
And the other thing that I did, and I don't think I'm going to do going forward is because IV is so high, because premiums are so high. You know, as you know, I sold some cash secured puts slowly on TQQQ and whatever.
Yep.
Hopefully, I don't even know how they're going to turn out. I have 4 days to go. I'm, biting my nails, right? 3 out of the 4 out of the money. I'm like, well, they could be in the money deep tomorrow because one of them happened to be a firm. And today, Walmart dropped a firm and took on Klarna for BNPL.
I
The
saw
stock
that.
gets hammered. I was at the money at 50. It hits 42 today. And then I have short puts. I'm going like, so selling CSPs is not going to be going forward either. I think going forward, I'm just going to trade the equity. If I want to buy it, I'll just buy 1,000 shares, 500 shares, if whatever the price is, and make a couple 3 points and get the heck out of Dodge until things settle down. If I have to trade, otherwise, I'm just not going to.
You said something that I was thinking about this weekend, which basically is the following. The cash secure puts in a bull market, they're a money printer, right? You just keep printing money. It's a great income generator. We're not in that situation right now, at least short term, right?
Nope.
And one of the things that really hurts when you have when you have cash secure puts is if the underlying tanks, you're stuck in the position for 2-3 weeks, right? Depending on where you sold. And it's really hard, even if you're not in the money, it's really hard to get out. I have my Google position. My strike on Google is 150. It's all the way down. I am perfectly fine being assigned. I've been stuck in this position for 2 months. Expansion of all. I have, it's not a big position, about 5 contracts. And I'll collect the money, but you know how it is, like you look at the net lick of the original position, you're like, man, this is $200. I wanted to come in and get in and out. And now I'm
that's the problem, though. See, that's the problem. You're not stuck. You're still okay because you have the mindset of assignment. But
I'm gonna exactly.
But the point is, those trades, those options that you had sold, would have hit the IV crush within a certain 20, 30 day later, and you would have collected your 50, 70%, be done with it, because your strike keeps going away from you, right? But my thing is, when you're doing CSPs now, the underlying is moving 5% a day now.
Yep.
Right. And the IV crush is not going to happen until probably literally the last day, because the option market makers are going to price all that in. And so you're collecting premium, or the theta, right? The decay is not happening. The decay actually
is against,
while the stock is going down a little bit, you're losing money because they're increasing the implied volatility on the damn things, So I'm going like, no more cash secure put. Let's answer this question, and then I'll look at some charts. I think it's a good question. I haven't looked at Target for a while, but you're in Walmart, so maybe you can look at it and answer. Is the retail recession? Is the retail recession priced in? Well, depends what kind of retail you're talking about. If you look at all the high-end retailers, they're doing exceptionally well, actually. But if you look at the low-end retailers, the retailers like Walmart had a bad quarter, Target definitely, and these are the mid retailers, I call it. And then you have the low ends like Dollar General, all these things, 99 cents, all these things, they're getting crushed. I mean, completely crushed, right? But Target and Walmart probably would be the 2 retailers that you look at. So what do you think about Target? P is around 11 with a 4% dividend.
Yeah, so a couple of things that we see now with Target. Number one is just market volatility in general. So consumer spending is getting weaker and weaker, and this discretionary spending is getting bumped pretty hard this past few weeks. So Target is going to be part of that bump. Now, on the technical side, right? Target has really strong support at around $103. So there's a double bottom for Target. So if if you have a long-term outlook on Target and you want to take a shot, you're going to own it for a while. You're going to collect a divvy, right? But this is the bottom of the market for Target for about 3 years.
I think Target is very similar to Nike situation, right?
Agreed.
I would love Nike at 70 like you.
Yep.
I don't mind selling cash secure puts, but there is not enough premium. But then still, I don't mind owning Nike. I think Nike will turn around after being dead for 3 years. Target, I agree with you as well. See, we're agreeing on everything. That's making me nervous. That's just right there, making me completely nervous. So I'm looking at my phone.
Like two minds, two great minds think alike.
Two great minds think alike, and they could be completely wrong. So it's like, so okay, see, this is like I'm looking at my phone now, looking at my watch list, right? So market was down, it's back up 50, Nasdaq up 50, S&P up actually 37, up over 0.5%. So here's the trade, right? Okay. So I'm cash secured puts, actually, thank God, it came back a little bit. So Affirm, right? Down 389. That thing was down to 42 today, right? I didn't do anything because I was going to either get a sign, don't roll, because I don't think Walmart choosing Klarna is going to make any difference for Affirm. But
it makes absolutely no difference.
None whatsoever. But you know how the market is, right? They try to shake you out. So I left it alone. So, but here's my pet peeve about cash secured puts. Okay. So I did 6 cash secured puts at 40 level on Robinhood, right?
Yep.
I took in like $2.50. Perfectly willing to own Robinhood at 37.5. Okay. I've been waiting for like 8 days. I only sold them like last Monday. Okay. When the market was tanking, literally dying. Right?
I remember when you sold them.
Yeah, and so they're still $1. Like, and Hood has moved from 34 to 42 now. It's up 269 today. Well, I should have bought the 500,000 shares of Hood, and I'd be so much better off. What am I doing?
Well, I think that a lot of people are starting. So I don't know if you've ever read about this, but a lot of people are starting to complain about black shows, and that the volatility is not priced in correctly, and there's a lot of mispricing of volatility into these options. Yeah. And it's unusual for you to see that a stock moves $5, right? Like it moved for you, and it should be worthless. The options, you should be collecting 70-80%, and then you don't see that, and you're like, is there something mechanically wrong here? So I agree with you. Sometimes you get angry, and what I really think happens is VIX 1 day versus VIX 30 day misprices the options, and then you start kind of like not collecting the options because the market makers are on the other side of the trade. That's what people don't realize, right? Yep. And they're making the market for you, and depending on where the gamma is for that specific option, you see the stock move one way or another. So I look at that position and I say, look, it's the cost of doing business if you're selling cash secure puts, because you just gotta hang tight and wait for them to decay at least 50%, right?
Well, the market makers are not. I mean, look, the reason it's like pulling teeth on cash secure puts now is literally pulling teeth is because the market maker knows what could happen, right? Okay, correct. So Hood. Okay, today is only Monday. It's not even markets closed yet. We have 4 days to go. You know what can happen in a 30 VIX market in 4 days?
Oh.
And if VIX decides to go to like 50, Jesus Christ, Hood could be 25 by Friday.
Agreed.
You know what I'm saying? That's why they're not going down. So I'm going like, but I think if you do cash secure puts now versus before, like you said, here's the deal. You must be committed to own the damn thing.
To only, yeah.
If you're not committed to own the damn thing, you're just messing around with a little premium here and there, don't do it. Don't do it. But if you don't have the account size to take these stocks on, don't do it. Because initial outlay may be a little bit, right? Not as much. The requirements for you to sell these options, but then now you're just gonna. I'm seriously, it's like watching paint dry. I'm like, okay, I'm just. And before, okay, for all of you who sell cash secured puts, compare it to before last 2 years, 23, 24, when you sold one, how these things would disappear within a week, right?
You couldn't lose
money.
And
then you roll them up.
Money.
Yeah, easy money. You roll them up. Now they're making you watch until the last literal hour because
let me tell you an example of how mispricing happens in the market. So FOMC day, when you look because selling zero DTEs, you can notice this on FOMC day. Traditionally, you have a lot of the theta decay on a zero DTE option come off the first 3 hours of the market, then it kind of stabilizes and you go into the end of the day. and then it falls off a cliff around 1:30, 2 o'clock in the afternoon. Yeah. On FOMC, the market makers hold. The options lose no value whatsoever. None. You can sell them 1 minute before the announcement and 10 hours before it's the same value.
Yep.
So don't tell me there's no manipulation with the black shows, because they are holding as hard as possible on the value of the options because they need to hedge. So these thing about, oh, you know, we have the formula, and no, the market makers make the formula. They're the ones that are making the market. They run the price according to their models. Yeah. Screw back, you know, black shows, screw gamma, screw whatever the hell you want to call. And I really see exactly what you're saying. If you're selling a cash secure put, you're staying at a trade forever, and you need to want to own it. That's 1,000%.
You need to own it, and you're going to wait until the last day to suck to get all the meat off the bone. There's so much meat left on these options. So I'm going like, okay, I'll cover. I have a little bit of a profit, but I know. But I go, I want to own. If it's that, it's that. So you just need to have a talk with yourself before you sell a cash secure put. Do I size obviously correctly, right? Because if you do get put, you need to you have the money. You don't want to go into margin in markets like this. But I'm going like, you know, the meat on the bone that you just bit off after a week, it's going to take you a month to bite off now, because that's how it's going to be. And on the 0 DTEs, before I let you go, is this. Well, okay, on my option chain, obviously I have my Greeks, important ones, but then I also have IV, right? I have never seen IV fluctuate as much as it does, even on a daily basis now, okay? And I'm going like, so when you're long something, IV is like keeping you alive, but because of the vol, like the VIX, obviously the volatility is so high that on the down days, IV is not protecting you as much because what's happening to the deltas, okay? So I'm going like, I have never seen this before. So if you are trading options, if you don't know any of these people, seriously check your head, because you are going to lose. If I can't make money, you're going to lose. And I've been sitting on my hands, watching these things move all over the place, intraday, in fact. And with the expectation of, okay, when is the IV crush? When is the IV crush? When is that going? Now I go like, okay, it's not going to be until like Friday until noon, probably. That's what I have to do. I have to watch all the way through the credits of the movie before I collect the money. So I'm gonna go through my positions, go through the charts, and then I'm gonna go.
Well, it was awesome. It was awesome to see you. We'll be back on the chat as soon as I have a little time. But it was great.
Absolutely,
to see you.
Man. So I'll see you on Wednesday on the members. I'm gonna move it to 5 o'clock from now.
5 o'clock is awesome for me. Yeah. Wednesday night I'll be with you guys.
Yeah, 5 o'clock, and then so be good. Keep your powder dry, and
powder is as dry as ever. If I show you my account, you're gonna laugh. If I show you my account, you're gonna laugh. I have to buy Bill shares to hold some value on the money, because it's
look, man. I think if you're green for the year by the end of the first quarter, I think it's like a major accomplishment, honestly.
Yeah, I'm green, not by much, but
yeah. Well, green, any green is good, because I don't think too many people are green. I mean, unless they're YOLOers and whatever they do, I'm like, those don't even count to me. But because the year end is so far away with all this volatility, seriously, it's like I'm getting old. I mean, because I'm used to volatility, but then we got kind of put in a lull the last 2 years, right? 12 vol. I'm like, hey, it's like, market only goes up, and then out of the blue, here comes the vol. You need to kind of adjust to that, because I don't think a lot of people are adapting. So, but we'll see where we go.
Well, it was nice to see you. I'll go back to the stream so I can see the positions. See you guys.
Okay, cool. See you.
Bye.
All right. That was good for him to show up, as usual. Very knowledgeable, part of our member group. And so let's take a look. Hopefully you guys can see this. Like I said, I'm like 90, 85% cash. keeping my powder dry. So here are the positions. All right. So this is what we mean about, vol is not going down. All right. So I'm short 3 TQQQ. Triple TQQQ is the 2x ETF of QQQ, bullish one. I'm short the 60 puts. I've been short the 60 puts. I have 4 days to go, as you guys can see. Average cost on the sale is $277. We're down to $116. Still $1. Index is 63. If we're here on Friday, they're going to expire worthless. Because what we're talking about, vol, implied vol on this option is 92%. Historical vol on this is like 56. That's why they're not going down. And I recognize this now that I'm going like, okay, this is just selling cash secure puts unless you're really 100% willing to own it. It's not a good idea. Long story short, 63. So hopefully I have a few more morsels of meat left on that bone. Upstart, exactly at the money. Exactly at the money. $50. I sold those puts $2.90. They're still $2. I sold them like 8 days ago. I'm up like, I don't know, 30%, 25%, but they shouldn't be $2. Why are they $2? Implied vol on those options, 98%. Historical implied vol on that is like 65. That's why they're not going down. I'm exactly at the money. So Upstart by Friday could be 65 or 45 or 40. That's why they're keeping those premiums so high. So on that one, I have so much meat left on the bone. Part of me says, take it, take the little profit. And part of me says, no, you're committed to own Upstart at 47. It's a good buy at 47 because 92 was high literally like 3 weeks ago. I'm okay with it. Here comes Robinhood. I'm short 6 of these puppies. The 40 puts at 230 average, they're down to 70 cents. This is the only one that's kind of getting crushed. But I'll give you guys an idea. Today's high low on this option, they're at the low now. Stock is 42, so I'm above the out of the money now. They're getting crushed a little bit today. Today's low high on this option, 71 cents and 217. That's because it's 91 IV. Yes, I have profits. I'm going to hold on. I'm willing to buy Robinhood at 37.5. And last but not least, Affirm. And again, my automatic is 5 lots at a time, and I add and scale in, scale out. I'm so scared of the market. I only did like 3 of these things. I'm short 3 Affirms. Okay, here's the history of it. On Friday, Affirm ended at $50 exactly, just like Upstart is now, exactly at the money. Today, news comes out. Walmart is picking Klarna as a buy now, pay later partner. What happens to Affirm? It goes down to 42. Now we're at 46.65. I sold these puts at 360. There's 394. There's pretty much $1 left, dollar extrinsic value left. But then Upstart by the end of the day could be back to 42. That'll be $8. Again, today's high low, 375 low, 722 high. IV 92.5, 93.5, 94 now. I mean, it's moving up so much that I don't even know, right? So what do I do with Affirm? Yes, there is some catalyst change. I'm just going to hold on because I was willing to buy Affirm at 46.5 or 46.40 because 50 minus the 360. I'm just going to wait. It could be 50. Affirm could be 35 or 65 by Friday. That's why these options are not going down. So if you're going to trade options, people, be really, really careful about this IV situation. It may look really juicy to you, but there's a reason they're juicy, right? So, yeah, I'm just going to hold on. That's my positions. And, hopefully they all expire worthless and I'll do them again. This time, I'm not doing it 10 days out. This time, I'm going to take less money. Probably the wrong thing to do. I probably should go further out. I can't deal with this. So I'm just going to, if I do cash secure puts at all, I'm going to do it with weekly options as opposed to 2 weeks out. So let's take a look at some charts and then I'll answer some questions and I'll say goodbye. SPY. That can't bounce. We're just bouncing back. We're under that channel that we broke out of. We're so far, if we do bounce to 575, maximum to the mid Bollinger Band at 582, this time I'm going to go short the market. So that may happen by selling calls, buying puts on the indexes. Although MACD is kind of turning up, but I don't think it's going to be a decent turn. So my point is we're a tad under the 200 EMA at 570. We are 20 EMA is 575. So I see maximum rally about 580 here. Same thing with the triple Qs. Look, man, the trade here is sell rallies, period, until proven otherwise. This is the triple Q under the channel that we've been in for a longest time, for a year and change. Under the 200 EMA, bounce back to the channel. Max, I see triple Qs going to 500, maybe 50%, 40, 45% rally after the sell-off, and then roll over. I don't think this is over. So my opinion again only. And that shows Apple, right? Let's take a look at some of the Mag 7s. Here's Apple under 200 EMA. What is it? It's up 22 cents today. 200 EMA is about 225, right? Okay. Same thing on Microsoft. It's been under 200 EMA for a while now, right? In fact, the 200 EMA is rolling over now, which is not a good sign. Seller of Microsoft, seller of Apple, Google. Yeah, same thing, under 200 EMA. Nvidia, it was up a couple of bucks, now it's down. There you go. It literally kissed the middle Bollinger Band and we're just rolling over, right? I mean, I don't know. You guys may be seeing something else. Although a couple of things are kind of outperforming today, such as Micron going back to the top of the range, and finally AMD is kind of outperforming today, up almost $4. Going above the 20 EMA, but so far under is 200 EMA. So keep your powder dry. Here's VIX. I think VIX is going to another pullback today. VIX pulls back to about 20. You should be buying VIX. I think we're going to be in a higher range now going forward, as opposed to you guys are used to 14, 15 VIX. Here's TLT. That's the trade that I'm looking for. 84 low, about 93 high on the last month and a half too. Yeah, 90 kind of looks like it kind of came back and retested its 50 MA. It's just kind of turning up. This is going to be the trade, okay? I think Marcio's right when he's talking about buying some leaps. I'll look at this trade once my shit is cleared up on Friday. And this is the 3-year TLT, right? So if you look at this as a chart, I mean, TLT during the pandemic, you guys know what happened. So let me put the 10-year TLT. TLT high during the pandemic, 180, 170, let's say 170. We got down to 85. So that's what happens when the rates go from 0% to 5.5%. We're basing here. I think that's where the trade is going to be, right? Again, under is 200 EMA, but I definitely could see TLT getting to 110, and if not 120 range, especially if we're going to slow down, and it's going to be a quick move. So bonds these days move really, really quick too. So selling puts, buying calls, I think will be the right thing, except that you got to time it correctly. And hopefully the premiums are not as crazy as the rest of the stocks are. Let's look at a few more names. Yeah, let's look at the ones that I'm watching paint dry. Here's TQQQ. I mean, look where we are. It just, if we rally to 68, 69, great. Instead of selling options at 2.5 and having an exciting 10 days, just buy the damn underlying and then make 5-6 points on it. I think that's what I'm going to do going forward, because this option thing is just directionally, especially, it's not working out. Here's Upstart right at the money, right? 50.04. They're going to make me watch this thing until the last second. And here's a firm. I may just close that even and just call it a day. But then there's like $1 left on it, but then they're going to keep that $1. So I'll give it a, I'll leave it alone because I was willing to buy it. So I'm still willing to buy it. Hood, I'm definitely willing to buy it. But there's still 70 cents left on that bone. So, but yeah, I don't know. Some other names that I'm interested in and looking at. There is a couple of, Chinese names especially. Right? Here's Baba. Doing great. Seriously. New high today at 148. Breaking out of the consolidation pattern. Here's Billy. Billy is going to be the next one that breaks out and gets into the mid to high 20s. Just consolidating. Next breakout out of that little pattern that we're kind of working out is going to take us probably to 30. Baidu kicking in today. There you go. New 52-week high. Yeah. This is where the game is at now. I love Bloom Energy, just biding my time. These are the types of stocks I like. When the market sold off 13-14%, what does Bloom Energy do? Nothing. Go sideways. Just going sideways. Okay, cool. Breakout is near. When it does happen, I'm going to be all over that like white on rice. Probably buy the shares, honestly, instead of messing around with options. A lot of it, people ask Bitcoin. Bitcoin is just doing nothing. This is IBIT. This is the BlackRock Bitcoin ETF. Found support at 200 EMA, just like Bitcoin did. So here's the one. I'm trying to be, I love Kava. So one of the reasons for Kava to go down as much as it did, probably, well, number one, it's an expensive stock, but it's in its growth phase. High PE, forward PE especially, but, they chopped that thing down from its high, close to 60% now. I have cash secure puts at the 80 level, expiring Friday. Stock is 78. I could get put full position on my investment account, or I could own nothing. I don't mind selling puts on Kava again. One of the reasons that sort of the sell-off is supposedly what Doge is doing, right? They're based in Maryland. Most of their stores are on the East Coast. They're coming out to the West Coast now. They're saying that a lot of people who get laid off by the government are not going to eat there. I'm like, get the F out of here, man. I don't even know who comes up with these excuses. Here's Nike, which I completely agree with Marcia, who was on. I think I wouldn't mind owning Nike at 70 or below. So cash secure puts would be okay there. MicroStrategy, Bitcoin, whatever Bitcoin is doing is what this thing is doing. I like the pattern, actually. We're trying to break out of this wedge. It's a descending triangle, let's say. Found support at 200 EMA. Same thing with MSTU. Same thing. Just buy the shares, man. Don't mess around with like options on these things. Financials are rallying a little bit today. Let's see what else. If you guys have questions, put them up, because I need to get in my car and start driving before I die in traffic. Go to Laguna Niguel, eat some fish, meet some analysts. Oh, let's take a look at Uber. Don't talk about it. Might as well know what the price is. Yeah, came back to 200 EMA after the earnings. Actually, it was down. But the next day, Bill Ackman announced he bought 30 million shares. So support 70. I don't expect much out of Uber, really. Lyft, same thing. Neo. Yeah, it's decent. Yeah, just gotta. This is Lyft, garbage, nothing. Palantir was red, was green, went to red, now back to green. I think it bounced as much as it's going to bounce. Yep. Right back to the, Bollinger Band. Mid-Bollinger. But that's the 10-point rally, though, 75 to 85. But even if you're right on the options on these things, you're not going to make that much money. It's just tough, unless you buy deep in the money options. And they're expensive. Even those are expensive. A lot of the garbage quantum stocks are moving today. One is ARQQ, up $6.30 to 21. I remember we were being long. I think some of the members are long $20 calls on this, which is good. God bless them. Big move up today. QMCO, another big move up today. Quantum Corporation. Here's QMCO. I mean, they went down so much, right? This thing was 90, went down to 875. If you're willing to write these things down and you time it right, you may be okay, but not my cup of tea, man. I have enough excitement. This is Quantum Computing Inc., Qubit. I mean, this thing was $4. It's like 8 and change, you know. Rigetti. Yeah, that had a big move on Friday. Reddit, I like Reddit, but then look at these pullbacks, some of these stocks, okay? Reddit 230 high, 106 low in 4 weeks. You saw cash secure puts on this thing, thinking, okay, at 200, it's down 30 points, it's good. You're dead. You're a dead man or a woman. I mean, look at this thing. You found some support, crashed through the 200. I mean, I don't know. This is, even for me, it's just too much volatility. What else? Yeah, I should do it. So I'll look at the positions one more time. SoFi came to the 200 EMA, broke under it, now jumping over it. I don't see much out of it. We'll probably retest again. And Tesla, I mean, market's back up 77. Tesla's still down 12 points. What do you guys expect? You should have expected a little bit of a bounce, right? Here's the Tesla. Here's the lines that I drew on Tesla. Here's my long-term support that's going back to the pandemic and before then into the price. Okay, we're at 162 on that line. We broke under this wedge that we've been squeezing in for a while. Man, I'm telling you, the retest of the 220 is going to be interesting on this. But the only good thing is MACD is so oversold. Maybe we'll get a bounce. I don't know. I don't see much, honestly. Stock has to prove itself to me. I mean, again, I like the company. I like the car. I like Elon. And one last Chinese. This is Direction Daily. Yin is the symbol. Beautiful. Just walking up to 20 EMA. Any pullback on these Chinese names need to be bought. My thesis was 100% correct, but I didn't make enough money on these on the way up. So, yeah, with that said, and here's another one. Look at this disaster. This is called App 11. I mean, that thing found absolute dead-on bounce from 200 EMA. 525 high in 3 trading weeks, 230 low. Now bouncing back. Okay. Maybe next retest. Okay. And here's another one. This is what the market does. If you own this thing, you're wrecked. Or if you had cash secure puts on this thing, you're wrecked. Even weeklies. In 1 week, this thing dropped from 525 to 400. Here's a trade desk. Oh, TTD. No, sorry. TTD. Look at this thing. Look at this thing. How do you, I mean, if you run into one of these, which is not rare when the market sells off, look at this thing. We're on the lower right, people. 141 high, 53.42 low. Trade desk. How do you survive one of these? I don't know. I sure hope I don't get caught with one of them. That's all I can say. Let's go look at the monitor. All right, so what do we have? All right, 63.50 now on TQQs. All right, that's cool. Options are still $1. So I'm 3.5 out of the money. I'm 5% out of the money. Options are still $1. Upstart 50.5. They're still $2. I don't know. Hoods are down to 65 cents, and Affirm, I may take my break even on this thing. This morning I was down. Yeah, I may do that and then just roll it a week. But then I have a week. How am I going to roll it? Maybe I'll roll it to 45s, but then stock's low is 42 today. I'll just leave it alone. I was willing to get assigned all of these. If I get assigned, I get assigned. That's it. Be a man, Serge. Don't be paper hands. Anyway. All right. JD, yeah, doing well. Root, yep. Love that chart. Talk about it. Yeah, Jason, member. I don't know, man. TTT definitely got executed. I think that's the right word. Yeah. Got taken out, back, and shot. That's what they do. In a bear market, bad news is bad news, man. Bad news is worse news, actually. So, all right. I will post my positions on today on the YouTube community page. Please put a thumbs up. Please share if you like the content. If you just choose to be a member, please do so. And see me on Wednesday at 5 p.m. Pacific, 8 p.m. Eastern on the members live. I'm changing the members live to 5 p.m. Pacific, 8 p.m. Eastern. And what else? So that's it. I'm going to go rub elbows with some CEOs today. Should be fun. Stay for the concert. Have some drinks. They're putting me up, so I can't complain. I ain't paying for anything other than the gas. I'm just going to drive, have a nice drive, have a nice couple 24-hour stay, and come back. And Soundhound CEO is going to be there, so I probably meet him. But yeah, man, that's where we are. So we're just going to wait. Just watch more paint dry, and hopefully those premiums on those options get executed like Jason says. They're not getting executed, though, because stocks are moving so fast, so wild, and the market maker has no reason to kill those volatility numbers on these options. It's good when you sell them, but then they stay there. They don't die, you know? Knowing everything I know from 6 months ago, if I did these positions, they would have been like down to 10, 20 cents already. No chance. So we're just going to wait until Friday. Or take 80% of it, take it off and be happy with the trade. Have 3 winners, 4 winners if a firm does something. Well, 3 out of the 4 are good. So that's it. So, Vamos Barca. What a comeback on Sunday. From being down to 0, 70th minute. 4 goals in 70 minutes against Atletico Madrid. That's why I'm a little hoarse today. I was screaming at my TV. I love my team this year. Every year I love it, but this year they have their shit together. Top of the league again. Vamos Barca. Barca forever. If you guys have some Real Madrid fans here, probably, but they'll boo me. Yeah, that's it. We're just going to wait. Wait it out. Cash is a position. Sit on your hands. Don't just be herky-jerky trading all over the place. It's really difficult to make money directionally when IV is this high. That's the best advice I can give you. There will be a buying opportunity. What's the rush? Are all of you expecting a V bottom? Like that? I don't think it's going to happen. I mean, it could. Anything is possible. But from what I've seen in the past, again, charts are not telling me anything about the future. But what I've seen in the past is telling me that this is the way it should be because macro picture is changing. Technicals have changed. A lot of damage has been done. It takes time to repair this damage, technically anyway. So don't be in and out, 10 times a day. Do something, be committed to it, but know where to also cut it, okay? Don't let it get out of hand. Because as you guys can see, all those 3 stocks I showed you guys, Reddit, AppLovin, and TTD, Trade Desk. If you're like, oh, it'll be okay, one day it'll be fine. I'm like, you're down 200 points on the stock. What do you mean one day you'll be fine? Or on TTD, you're down 100 points or 80 points on the stock. These are points. It doesn't work like that. So don't put your head in the sand and say, I'll come back in 3 months, everything should be okay. Just trade. Trade the underlying. Forget options. Leave the options to YOLOers and stuff. Just trade the underlying if you want to trade. All right. So much love. See you guys on Friday for Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. And see my members on Wednesday at 5 p.m. Pacific, 8 p.m. Eastern.